Hey, good morning, everybody. Today is Wednesday, June 22nd, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Let's get started this morning with our Spectrum Analyzer. It's important that we identify where the leadership in the market is. To that end, we use HDSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 11 came from the exploration and production industry. That's oil exploration and production. 11 came from midstream oil and gas, 10 from packaged foods. We had 10 real estate investment trusts, and rounding out the top 5, we had semiconductor manufacturers, integrated oils, mass merchants, and infrastructure software, with 4 stocks each in the 100 most powerful stocks in the most powerful industry groups. A lot of oil and production, a lot of oil and gas. Looks like the oil patch is probably a pretty good place to be looking for leadership at this point. I want to try something a little bit different today. I want to run through a few of the stocks that are showing up in our Spectrum Analyzer and see how they're setting up on a technical basis. First, let's start with Baytex Energy. Baytex appears to have put in this nice little tight flag formation. It bounced off of its 50-day moving average and might be a good swing trade here. Carrizo Oil and Gas bouncing off of its 50-day moving average. Continental Resources also bouncing off of its 50-day moving average. Notice how these exploration and production stocks are all approaching new recent highs. Devon Energy, EQT, Gulfport, Marathon Oil. This one's interesting. Marathon Oil gapped through its 200-day moving average, put in a real nice pocket pivot here. Maybe worth a little bit closer look. Coming down to midstream oil and gas, we have Boardwalk Pipeline, again closing in on a new high. Enbridge, Energy Transfer Equity, all these stocks putting in new highs. Let's take a look at what our Russell 2000 is up to. Stocks were mixed yesterday, and the Russell 2000 actually closed down 3.83 points, or 0.33%. We brushed up against resistance right here in the 1156 range, and we seem to have failed. That's the next significant area of resistance for the Russell. I believe that if we break through that area, the next significant area of resistance is going to be this high up in this area. I think the Russell's the key to the market going forward. In order for the market to move significantly higher, the Russell has to take out this resistance area in the 1156 range. Let's see what the NASDAQ Composite's doing. But before we do that, stocks closed mixed yesterday, with the S&P and the NASDAQ notching gains, while the small cap Russell 2000, as we just saw, closed lower. Trading volume was light. All 3 indexes closed near the top of their daily trading ranges, which is a little bit more bullish action. Our distribution count held steady at 3 days for the NASDAQ and 2 for the S&P 500. Investors.com has a slightly higher distribution count, with the NASDAQ showing 4 and the S&P indicating 5 days. That noted, Investors.com has lowered its outlook on the market to an uptrend under pressure. Our market timing model's on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Both the S&P and the NASDAQ recaptured support levels at key moving averages. The S&P recaptured its 50-day moving average, while the NASDAQ recaptured its 200. Tuesday advancing issues top decliners by about a 5-4 margin. New highs continued to better new lows. According to our Ramosi ratio, large capitalization stocks bettered small, but small caps continue to outperform on a 10-day moving average basis. Bulls prefer to see small caps outperform. The short-term McClellan oscillator inched into bullish territory yesterday, but Wilder's directional movement indicator remains on a sell signal. Our Ramosi swing timing model is indicating a neutral condition in the market. From a market perspective, both the S&P and the NASDAQ have recaptured support at key moving averages. Our market timing model is on a buy signal, while our distribution count is less of a concern. It appears that the market's trying to put in a short-term bottom. From a bull's perspective, it's important that we hold our mid-May support. For the NASDAQ, that would be the 4678 area. For the S&P, the 2044 range. But more immediately, we need to hold moving average support as noted earlier. In the meantime, traders should be cautious and should keep their stops in place. Okay, yesterday, the NASDAQ Composite was up 6.55 points or 0.14%. We closed at 48.43. We tested resistance at the 50-day moving average and failed. Note that right now the NASDAQ appears to be range bound between the 200-day moving average, which we show in black, and the 50-day moving average, which we show in red. Right in this little area right here. Hopefully we can continue to hold that 200-day moving average and go on to take out resistance here in the 49.69 area. Trading volume yesterday was lower than the prior day. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend since February of this year. We have only 3 distribution days in the past month. That's not very much distribution and really isn't a cause for concern. Right now the NASDAQ is on a buy signal according to our market timing model, while on an immediate term basis the NASDAQ is bracketed between its 50-day and 200-day moving averages. On a longer term basis we have support down here in the 4678 area and resistance up here in the 49.69 range. See what the S&P 500 is up to. Yesterday the S&P was up 5.65 points or 0.27%. We closed at 2088. S&P continues to struggle with psychological resistance in the 2100 area. Trading volume yesterday was light. The S&P 500 is in a confirmed uptrend, has been since February 18th. I'm sorry, the S&P is in an uptrend under pressure. It's been in an uptrend since February 18th. We have only 2 distribution days on the S&P. Not a lot of distribution, not much of a concern. Our market timing model on the S&P 500 is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. S&P appears to be bracketed by immediate term support at its 50-day moving average, which we show here in red. More significant support down here in the 2044 area, and we have resistance up here in the 2116 range. We'll see if the S&P can continue to respect its 50-day moving average and eventually challenge and take out the 2100 area. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues, Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes and LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes and LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes and LaCours Incorporated believes to be accurate. Ohannes and LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes and LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.